think what's important is for investors to consider the entire stack and in general to realize that the lower you go down the stack, the least risky the investment is. If you're talking about energy and real estate that create the data centers where we put the GPUs, and then on the GPUs, we're running the middleware, firmware, software products. The lower you go down that stack, the least risky it is. Of course, I'm sure plenty of people here have tons of energy and real estate in their portfolio. And then, of course, the next most exciting part of this is the GPUs and other types of servers and computers that are allowing the rest of the AI stack to run.
All right, well, good afternoon, everyone. Welcome to our session. Today, we're going to speak about the AI capital stack. Where are investors capturing value? Over the last few years, AI has really moved from a technology theme to a full investment framework, shaping how investors think about infrastructure, data, applications, and enterprise productivity broadly. The question now is where is value actually accruing? Who is capturing it, and what parts of the stack may prove most durable from an investment perspective? Today, we have really an excellent group to be able to address these questions with people with very different backgrounds that can attack these questions from different angles. We have anyone from investors to infrastructure builders to data scientists and workflow innovators on this panel. And I think we should start off. We'll have a little bit of introduction from the panel members about themselves and their background. So we'll start with you, Brittany.
Hi, everyone. My name is Brittany Kaiser. I'm the CEO of Alpha Compute. We are a GPU as a service AI infrastructure company that specializes in confidential computing and sovereign AI stacks so that you can run AI models without the owners or creators of those models getting access to any of your data. So we do this for compliance purposes and in general so that you can own all of your IP, copyright, patentable materials, or even for governments, of course, classified materials. I am a former big tech whistleblower, so I have been working with, sitting on multiple US congressional committees on these topics for nearly a decade and have helped co-author and pass a lot of the legislation on data protection and privacy in the United States.
Thank you, Jamie. Thank you, iConnections. Hello, New York. I'm from Hong Kong. ALPS Capital Management is a multifamily office based in Hong Kong. And I believe it's probably one of the longest in the establishment of multifamily office in Hong Kong. We've been around for 3 decades. We service 12, very sophisticated families. Multi-asset, multi-manager approach, and I'm in charge of the investment capabilities of the company. Very nice to meet you guys, and happy to be here.
Hello, everybody. My name is Matei. I started my career in investment banking. I was at a hedge fund for a while, and for the past 10 years, I've been working at System 2, which is the company I started, where we work with fundamental investors to help them incorporate data science and AI into their process. So trying to think about what are the interesting places to put your money in when it comes to how AI is changing a bunch of different industries, but also how can the investment process itself be changed by leveraging AI?
I'm Crawford Hawkins, founder and CEO of Virgil. My background is in the hedge fund industry, 5 years on the sell side. I left Credit Suisse, went to Elliott Management, special situations there, and then was seeded by Tiger to launch a long-short fund. Ended up kind of a personal crisis and a drawdown in the portfolio that I realized, public long-short equity investing wasn't for me, and I wanted to build from the bottom up. And so Virgil is really the intersection of that. We're a system of intelligence for funds, banks, allocators. We take unstructured data from all of your CRM documents, decades worth of emails, build relationship graphs and profiles of every deal you've seen, every LP you've interacted with, and help you manage those relationships and manage that context. And then we evaluate any AI output against that orchestrated data, so that if you're producing something in Claude, we help to validate that there's absolutely no hallucinations. So that's us.
Excellent. And Jamie Stewart, I'm a managing director in State Street's data intelligence team. It's a team we started up last year. State Street is a large bank, like a lot of other large banks are deploying AI technology across the bank to drive operating efficiencies. What my team is focused on is to take our data and make a lot of our data more actionable for investors and allocators in real time, where we can develop different tools. Some of the things that we are working on, for example, we have a data set where we provide daily inflation indicators across 27 different countries. And we're using AI tools to distill that raw price data into actual KPIs and other deliverables based upon different clients' investment strategies and other objectives that they're trying to achieve. In the media space, we're using large language models to analyze really unstructured media and sentiment data to distill it down into actionable trading signals. And in the private markets, we're analyzing a lot of the general partner data, which tends to be fairly unstructured, and to turn it into different indicators on fund performance and the dispersion of returns by strategies and by their sector exposures. So with that, let's move to the questions here for the panel. We'll have to start off with a question I'll pose to each of you individually. So we'll start off, let's do kind of a broad question to start. So as you look across the AI capital stack today, everything from chips to compute data, models, applications, where do you believe investors are seeing the clearest return on their capital today? And then how do you think that'll change over the next few years?
I think what's important is for investors to consider the entire stack, and in general to realize that the lower you go down the stack, the least risky the investment is. If you're talking about energy and real estate that create the data centers where we put the GPUs, and then on the GPUs we're running the middleware, firmware, software products, the lower you go down that stack, the least risky it is. Of course, I'm sure plenty of people here have tons of energy and real estate in their portfolio, and then of course the next most exciting part of this is the GPUs and other types of servers and computers that are allowing the rest of the AI stack to run. We work at the GPU level and at the firmware and software level, so we're a vertically integrated company that invests in NVIDIA's newest chips, mostly B200s and B300s, in order to run frontier AI models for our clients, both enterprise and government. And for us, we really believe that we're most excited in GPU compute exposure. It's probably the hottest market in the world right now. And so being fully vertically integrated from the land and the energy reserves to the data center to the GPUs and then all the way up the stack, I think is the most exciting opportunity. Usually most AI companies are playing in just one part of the stack. I would say most AI companies are just in the software level. I think that's a lot riskier than going all the way down to energy and of course to the bare metal computers, which is where we concentrate.
I think that's a very interesting observation, and I totally agree with that. But at a higher level, from an allocator perspective, I think people are generally asking a few, very general questions. At first, I think investors, they didn't quite understand what AI investing really means, so they're really focusing on the TAM, narrative. So the bigger they are, the better they may be, So the more accessible market they are, then the likely successful rate will be higher. And now, I think people are starting to ask, more granular questions in terms of, okay, the monetization, the path, where is it going to be? Rather than, at the adoption of the AI, does it mean, a better economy of scale and stuff like that? So going forward, I think, you've seen the market movement, So markets are really starting to question more and more about it, and hence, we're seeing more and more volatility, higher volatility. And I think that would likely continue, and then eventually, I think that ultimate question will come. Who are the winners? Who are the losers? I think the markets are getting quite sensible in that from that angle, constantly assessing where we are. Unfortunately, the byproduct of that is for the time being, the high volatility is here to stay.
Yeah, on our side, because we work with a lot of investors who are interested in investing in AI, we've seen a number of questions related to this, and it's everything as you mentioned, from the software layer all the way to hardware and all the way to trying to figure out what's happening with market share of these different companies. So for example, you can look at what happens to individuals' behavior after they take their first Waymo ride. What happens to that person's usage of Uber after they've experienced self-driving cars? And we have data from like credit card transactions, mobile phone usage that can give us an indication into how these behaviors are changing as a result of these technologies coming around. And then yeah, depending on how the curiosity of our investors, you can go down these rabbit holes pretty deeply. So for example, you can say, okay, well, Waymo, that's, it's interesting. It's very convenient. You don't need to talk to a driver, which is one of the complaints about Ubers. But at the same time, like, how do you think about the capacity and the capex that's involved in bringing a new fleet of Waymos into a market? So it might be an interesting experience, but like in a lot of these markets, it's all about the surge. So what happens when everyone gets off of work and you need to get home? Will you have enough Waymos to get them there, or do you need to substitute some of that supply using more traditional human labor? And what would it take to like build out a fleet of robot cars that are just sitting idle most of the day? So thinking all the way through these like second or third order effects of what the implications are for the portfolio companies. But yeah, to Brittany's point, there's also a level of like, what happens? We're talking a lot about data centers and the hardware and the energy consumption. One of the things that we've been thinking about, even on our family office side, is what's sort of the Sci-Fi portfolio? If you take this to an extreme where the future is as crazy as we can imagine, I'm happy to go there. What would that look like for investments today? And one of the big themes comes back to robotics. And if you think about robotics, the hardware needs of robots are very different from data centers, where you need to have mobility, you need to have like energy efficiencies, all the way to the actual chips that do like your memory chips on a robot that can't plug in seamlessly into a data center for updates. You want them to make autonomous decisions, whether it's in the field or in a war zone. How do you redesign those components to make them so that they can operate in those kinds of environments? And what are the technologies that might be worth investing in to achieve that future?
Yeah, it's an interesting take. I think Brittany laid out sort of the risk profile of the entire stack very well. There's a massive amount of capital going in to compute, and I think as you see the usage that you just described on both consumer and enterprise level, and that adoption rate over the last year has started to accelerate. I think that's where you start to see interesting returns and opportunities migrating up the stack, still with the embedded risk, and that's why you see the foundation models moving into the application layer so aggressively. But we also, and I think a lot of what you touched on is around the private data. We see that very, very acutely with our customers, funds and banks asking for more data to be given to Virgil, because that makes the tool much more powerful and lifts the IQ of the entire firm. And that's where I think as you look at any sort of application across these opportunities, it's that private data and that context that matters very, very importantly. So.
Well, thank you. Those were great responses. I have a couple individual questions. We'll start with you, Brittany. You really have a very extensive career background, kind of intersection of data ownership, digital assets, and then even public policy. As AI continues to scale, how important is data sovereignty, and control over proprietary data become in determining like who is the actual realizer of the value in the AI stack?
I think nothing could be a more important discussion. Of course, I believe this is the #1 issue that everyone should be thinking about when integrating AI into your daily life and especially into your business, which is, do you have the ability to own your data, your IP, your copyright, your patentable information, your classified information if you're working for a government? The answer is probably no with the stack that you're using right now. Confidential computing is not that available. It's mostly used by our Department of War for autonomous drone programs. It's used by Amazon and Alibaba for secure global shipping. but that level of encryption is not widely made available to you because access to your data is how most AI companies make their money and train their models, right? So it would not be convenient for them to allow you to own all of your information and not get a copy of it themselves for training or other purposes. And so I really believe that one of the most important things that we can think about from a business perspective is compliance. How are you actually going to lower your risk of data breaches? How are you going to lower your risk of you filing a patent and it not being able to hold up in court because actually your information is owned by Anthropic or OpenAI? A lot of people are not asking themselves these questions, and the companies that are the ones that are being hesitant to implement AI because they don't feel it's safe for their business and they don't feel like they can control the risk. And that is a huge problem. At Alpha Compute, we are very focused on making sure that confidential computing, where you have end-to-end encryption all the way down to the hardware level, where you can mathematically prove that none of your data is accessible, that this level of compute is absolutely essential. And instead of your data going to train models, going into millions of databases around the world, where malicious prompting can take all of your personal data out of that model and out of that AI, that instead you would be able to prove that your data is 100% yours or your company's or your government's. I think especially in a time where we are at war, it should also be a national security priority conversation where all, for this country, Americans' data should be processed in America. In the UK, British data should be processed in the UK. We should not be sending sensitive data across borders, especially from government departments and agencies, or from big companies that collect sensitive data from individuals and their customers. I couldn't feel more strongly about this, and I think finally our government, especially this administration, is waking up to that and looking to vastly expand its confidential computing footstep.
So Vincent, you are the only allocator family office on the panel, so I think a lot of people are interested in your perspective. Where are you seeing AI in terms of, where is it actually delivering practical value today? Is it selecting managers? Is it in portfolio construction? Is it operational efficiencies, market analysis, all of the above? Something I didn't say? Be curious your perspective.
Thank you. I think Brittany's description about the complexity of compliance issue, privacies, all that is actually a great advantage, for a small outfit like us. Every element that you mentioned just there, I actually feel really excited about because, there was a time, I really need to think about, resources and rationing. I have a small team of 5, so there only so much, we can cover. But now, because we're smaller, and obviously, confidentiality is paramount, for my business as well. However, because we're a small outfit, it means we can get through hurdles, making sure things are actually getting done properly much easier. And for that reason, we're actually adapting some of the AI tools much quicker. When I talk to some of my peers, who manage a much bigger team than I do, I feel that we really have a great advantage. So in the past, for the five of us, we may be covering 15 managers per week. And now, we can really, why not just go all out, and trying to do absolutely anything and everything. And in terms of portfolio construction in the past, we're trying to collect data with only a handful of managers that we're covering because it's actually quite manually demanding to collect all the data. But with the help of AI, we can actually collect as much as possible. And that means the portfolio construction technique is actually getting more and more sophisticated. I'm really excited about it, and I genuinely feel now we really up the game. In the past, I might talk a lot about resources constraint, but now I feel really great about it.
Excellent. So I have a question for everyone in the panel. We'll kind of start the other side of the panel now with you, Crawford. One theme that's really emerging across AI is that just having access to AI tools is not enough. It's kind of ubiquitous now that just about everyone is implementing some form of AI in their business. So, the real question is, as AI capabilities become more available, more standardized, and just more utilized by all actors across not only investments but really across everything, Where do you think the enduring edge is going to come from? What's the, is it the data? Is it the infrastructure? Is it like workflow advantages? Like, where do you think is the enduring value proposition for AI?
Yeah, I think if you look at sort of the arc of information asymmetry in public markets as a corollary for this over the last 30 years, pre-Reg FD, there was really interesting opportunities to have this context and information, a gray area, if you will, but it was where you could create alpha. You had this movement, with sort of the expert networks. Then you had this data movement where the access to credit card data, some of the stuff you were referring to, it's all becoming more and more commoditized. I felt that acutely when I was managing a fund in 2017, 2018, where I was just 2 minutes behind these sort of the players with spending billions on data. I think that is where you're kind of seeing that compounding with AI. And so the edge, in my opinion, becomes much more on the internal context. And if you look at investing, it's following patterns, it's having frameworks, it's following playbooks. If I look at, from my time at Elliott, we might spend 6 months just to pass on an opportunity. And a lot of that is built over 30, 40 years of institutional knowledge. And so it becomes really valuable to bring that to every employee. And that's where we're focused, is really bringing that level of private context and data to every employee so that they can just be, just raise the entire IQ of the fund and make that sort of decision making better, because the access to the public data is becoming so much more commoditized. So I think it's really about the workflows and the private context where it becomes extremely valuable.
Yeah, I'd like to jump in there quickly because I couldn't agree with you more. I believe that in the entire stack, the most important asset is your data, your proprietary private data, not all the public data sets that you're talking about that have become more commoditized, but your proprietary data. So I'm not saying we're providing a less valuable part of the stack, but we're providing the infrastructure for you to protect your most valuable assets. Your proprietary data for your business, from your customers, where you have learned that over however many years and built an entire business around it, that is the most important information out of the entirety of any part of the AI value stack. And so making sure that you are putting in place infrastructure where your data protection is the most important thing that you are doing will make sure that the rest of your business continues to function without any issues for years to come.
That's a good segue for Matei. You work with clients, have data, the client data, they've got market data, they've got alternative data. Where are you seeing the real sustainable value from the clients you work with and the work you're doing?
Yeah, I mean, there's getting data into these models is one of the first steps in actually doing something with it, and it's not trivial. Like to give you an example, a lot of our fundamental investor clients, they read stuff, and so we can use these models to go and dump in a bunch of like sell-side reports, your own internal reports, and try to make sense of it. And they're running into issues where the context windows aren't large enough that they can summarize or work through like these massive amounts of data sets. Like we have clients that are involved in class-like litigations where you have millions of documents that you want to identify interesting pieces of information from, and the models are just not there yet. So how do you summarize these documents to reduce their size, to make it so that you can actually get interesting things from them? It's actually not trivial. Like we were working with one of our PMs, and he was saying, like, look, if I summarize all of these documents, whether it's whatever, like an insurance claim or a sell-side report, the summaries are going to look very similar to each other. Like I don't care about the summary. I just want that one piece of information that is different in this one document versus all the other ones that it ingested. And that, by definition, is not how you summarize something, because by summarizing, you're reducing all that noise into the commonalities. So thinking through like these, and ultimately you can solve this problem by having smarter embeddings, smarter ways of like, there's now these LLM wikis that can do an interesting job of extracting facts from articles that you can then identify, like, well, what's the new interesting fact that I didn't know before, given all the corpus of information that I've had. So it's like, yeah, the models can do quite a lot, but thinking through like what is the question I'm ultimately trying to answer, and how do I want to prepare my data to be able to get it to that point is part of the magic.
Oh, that's excellent. And Vincent, I know that we're going to kind of skip over and have something more unique to yourself for an answer for this question. So I think in addition to being the only allocator on our panel, you're also bring some unique perspective being from Hong Kong. Perhaps you could touch on like some of the difference between, working with, the East-West relationship and perhaps like the, working with China in particular, just some of the nuances and how that applies to your business and AI in particular.
I think it's constraint as well as an opportunity. Constraint meaning that, because now with all the geopolitics and political issues and everything, whenever we talk about, the Chinese opportunities, I mean, they're always, pushback and even difficulty in terms of implementing. From a pure allocating perspective, sometimes, when we're trying to invest in, some of the, the US funds, we get pushback just because, we are sitting in Hong Kong. And Hong Kong, unfortunately, is a part of China. And because the technology is also a sensitive, a topic, and we have been turned down by some of the funds that we're looking into. So yeah, that's a constraint. But it's an opportunity, but because for us, being a multifamily office, we're there to provide a solution for our clients to get access to different vehicles. So that means, with our network, with our, relationships, we can get around, a lot of this stuff. Yeah. So unfortunately, so some of this, maybe are hurdles, but because of the hurdles, it gives us the opportunity to do that. And also, one other thing, I often find it very interesting is, right now, I think, people talk about, how stressed the valuations are, for the AI-related names and everything. If you look at the Chinese names, I can hear a lot of people, talk about the potential opportunities, but yet, valuations are still not quite there. I think the re-rating should be there, but it's not happening. So I feel it's an opportunity, but I don't know how long it's going to, get the value. So I think that will be, for every one of us to think about.
All right, we're down to less than a minute each, and this is the million-dollar question that everyone is interested. So if we look out 12 months from now, what do you think is going to be the one development in AI, either investing or adoption within the financial services industry, that you think will matter most? And then where do you expect the next wave of value that people will capture to emerge? Start with you, Brittany.
I would say if you're talking about the financial services industry specifically, financial services and any other regulated industry where the data specifically is very regulated, I think one of the newest adoptions is going to be this resurgence in confidential computing. Intel TDX has only really been around for about 2 years. We're finally starting to see enterprise interest in fully encrypted workloads. I think that's incredibly exciting. Of course, it's my favorite issue, but I really think for regulated industries, we're starting to see bills that are dropping in state governments and at the federal level where regulated industries actually have to have a sovereign AI stack. It's right now not a requirement, but I think a lot of people who are making compliance decisions on behalf of companies and government departments are saying, well, we actually need to have confidential computing, and we're starting to see more budgets being allocated to it at both the government level and enterprise. So over the next couple of years, I really see sovereign AI stacks where I would say enterprise and government are starting to even bring all of their logistics on-prem. You're starting to see both the ownership of energy and real estate and at least the GPUs. So you are owning your own computers to run all of your AI workloads. Certainly the government is really focused on that. I see a lot more enterprises doing that like they did a few decades ago where all of your stack is actually, on your own campus. That is becoming more popular, and I think it's really becoming a legal and regulatory issue as well.
See the timer, 20 seconds, Matei.
I think I've been thinking a lot about if you take this to the extreme, what happens if human labor becomes worthless? And if robots and AI can do everything, and there's bullish and bearish arguments to this. The bullish argument, in my opinion, is what happens if we have robot slaves? And we've seen, like, historically, I mean, it's obviously a sensitive subject, but a lot has been accomplished through slave labor, ranging from the pyramids, the Great Wall of China, the Roman Empire, America. And if now you wake up tomorrow and we each have like 10, 20, 50 robot slaves to do things, what could that mean? Like, I'm gonna build a statue of myself in front of my house. My house can be very different than all the other cookie houses in the neighborhood. And so there's a lot of things to say there. There's also like the bear case of what happens if the labor goes to zero. And the main thing is that governments will no longer need us. If you think about the rise of democracy and what has like led to the rise of democracy, it's been that people have been valuable as soldiers to throw into an army, like using my body to fight war, and then also for taxation. Like, you need me to pay for your shit. And there's this like love-hate relationship with the IRS where it's very abusive. You know, they can audit us, they can arrest us, but at the end of the day, they still care about me enough to like put me in jail if I don't pay them. The worst case scenario, the scenario I fear, is when the IRS no longer cares about me because I'm no longer producing any wages that they can tax. And in fact, it's like the government paying me a universal basic income. So, like, if you think, and I'm happy to chat as much as you want about this, but if you think about like what happens if human labor goes to zero in that like future sci-fi scenario, the whole world is very different. And the investments and how to like go from here to there are also tons of opportunities.
I think they're going to hook us here on a time, but thank you all for your attending and your attention, and appreciate everyone on the panel for their insights.